Okay, the first financial statement that you should look into is the balance sheet. So, what is a balance sheet? In terms of definition, the balance sheet or the statement of financial position is simply a document that summarizes all essential information related to a company's assets, debts, and capital at a particular time period. When talking about the balance sheet or the statement of financial position, you always need to make sure that you'll never forget this accounting equation. Assets equal liabilities plus shareholders' equity. The reason why this document's called a balance sheet is simple. It's because the total assets of the business must always balance with its total debts and its shareholders' equity. In a very simple way, you can understand that the shareholders' equity is simply the capital from the company's investors. For example, when you buy a stock, the money that you put into the business will be considered the shareholders' equity. The assets are what the company owns, and the liabilities are what the company owes. Based on our formula, the shareholders' equity equals the total assets minus the total liabilities. Easy, right? Here's an example of a balance sheet. We have three main categories: the assets, the liabilities, and the owner's equity. And we always have the total assets balance with the total liabilities and the owner's equity. In the assets category, we have two subcategories: current assets and long-term assets. To make it simpler, when you see the word current, this means it's a short term. So the current assets mean short-term assets. The current liabilities mean short-term liabilities. A short term is a period that lasts within 1 year. A long term is a period that lasts more than 1 year. Okay, now you see the difference between the current assets and the long-term assets. The current assets are short-term assets which may be used up or converted into cash within a 1-year period. The long-term assets are assets which may be held and used for the long-term period. As we've learned, assets are what the company owns. So the current assets are what the company owns for a short term, and the long-term assets are what the company owns for a long-term period. The liabilities category is similar to the assets category. We also have two subcategories: current liabilities and long-term liabilities. Liabilities are what the company owes. So the current liabilities are the debts that the company owes for a short-term period, and the long-term liabilities are the debts that the company owes for a long term. In the balance sheet, as you can see, there are many different types of accounts. And the good news is, you don't need to learn each of those accounts because you're not learning to become an accountant. You're taking this course to become an investor. So you only need to learn the stuff that can help you make investment decisions. In a couple of minutes, we'll look into some important balance sheets accounts that you need to learn before starting to invest your money in a business.